Why should I trade the Binance margin? What if it were possible to trade any crypto asset of your choice with more money than you have? Margin trading in crypto involves just that. In this video, I will explain what margin trading in crypto is and why you should trade with the Binance margin. I will be showing you examples and cases of when you should use the Binance margin. Margin trading is a trading approach that allows investors to make spot transactions with the help of borrowed funds to amplify trading results. It is a common leverage trading strategy used by experienced traders looking to increase their purchasing power rather than be restricted by their own capital. Margin trading amplifies trading results so that traders are able to realize larger profits on successful trades. This ability to expand trading results makes margin trading especially popular in low volatility markets, particularly the international forex market. Still, margin trading is also used in stock, commodity, and cryptocurrency markets. Leverage describes the ratio of borrowed funds to the margin. For example, for a $100,000 trade with leverage of 10:1, a trader will need to commit $10,000 of their capital. The cryptocurrency trading community often uses the X terminology to describe leverage: 2x, 5x, 10x, and so forth. Margin trading can help a trader to 1. Maximize returns. With margin trading, you can enter the market with a bigger position, which means bigger gains on successful trades, as compared to using just your existing funds. 2. Convenient experience in trading. Margin trading allows you to enter positions quickly, without depositing more funds, to acquire the same position size. This also allows you to save time and act quickly if you are timing the market. 3. Diversify their portfolio. With borrowed funds from margin trading, traders can open multiple positions with relatively smaller amounts of capital, without compromising position size. This allows traders to diversify and hedge, reducing the risk of large losses by preventing traders from investing all their capital. While margin trading offers exciting pros, it also has a disadvantage, which is high risk. High returns are usually accompanied by high risks, and this is true for margin trading as well. While returns are potentially amplified, potential losses are also multiplied if the tide is not in your favor. It is always to keep the risks in mind and understand how to use margin trading to your advantage before committing your capital. This includes knowing where and when to margin trade. Binance Margin allows users borrow funds to engage in margin trading to increase their position size. Binance Margin trading grants eligible users access to funds from the Binance exchange for use in leveraged trades. Experienced traders looking to increase their buying power can use the margin trading feature to amplify potential returns on long or short positions. Binance Margin supports the cross-margin trading and isolated margin trading mode. In cross-margin mode, the risk is shared between your margin account. In isolated margin mode, the risk of margin is independent for each trading pair. Why is Binance Margin good for you? 1. Diverse trading pairs. Binance Margin supports over 600 trading pairs, including some trading pairs that are not commonly offered. 2. Multi-asset collateral. Margin users are able to invest multiple assets as collateral to borrow and trade on leverage. On Binance, this can be done in the cross-margin mode. Instead of investing BTC only into a BTC-based margin trade, investors can use their BTC and ETH, or BUSD, USDT, and so on, to denominate their collateral, allowing traders to operate with more flexibility when opening trades. 3. Cooling off period. Sometimes, the best trade is no trade at all. In order to help users avoid excessive trading, users can temporarily suspend margin trading related activities for a specific period by activating the cooling off period function. This is part of Binance's efforts to encourage responsible trading and prevent compulsive trading behavior. This feature allows you to limit and control your trading activities, especially in situations when you feel pressured by losses. It also enables you to abstain from behavior and activities that can lead to irresponsible trades. 4. Insurance Fund. Binance Margin has an insurance fund that protects users' accounts when their equity, that is, their assets minus liabilities, is less than zero, or when the user is unable to repay debts due to lack of funds in the account. How to use the Binance Margin. Before you can use the Binance Margin, you should have a margin account. Please click the link in the description of this video to register an account. On the Binance homepage, hover your mouse to trade, then to margin, and with just a click you be in the margin trade environment. First, I will transfer my assets, which will serve as my collateral or margin, from my spot wallet to my margin wallet. In this case, I will be transferring 95 BUSD as my margin. Next step, I will click borrow. If I want to borrow BUSD, I will have 190 BUSD to borrow based on my initial collateral or margin, which was 95 BUSD. We have to note that there is an hourly interest rate charge on borrowed funds. Binance Margin supports multi-assets collateral. I can borrow any crypto asset, BTC, BNB of my choosing, saving me the stress of converting my assets before transferring them to my margin account. Note that this only occurs on cross-margin trade. To repay your funds after a successful trade, click on Repay, and you will see your debt and your available balance. If the trade is unsuccessful, the system does not deduct the amount automatically. It allows the user to refund manually. To margin trade BNB USDT pair using borrowed tokens, the total amount you borrowed plus your margin becomes the available balance. You can now click on Margin by BNB. You may want to always monitor your margin risk meter to know when you are approaching your margin call and liquidation. Please manage your risk. You can temporarily suspend your trade to avoid excessive trading using the cooling off period function to access it. Go to Wallet, then click Margin. On the right side of the page, click on More and Borrowing Cooling Off Period. You can disable Margin Borrowing function. Then you can fix the period. That's how simple it can be. So you can start trading Binance Margin and enjoy the amazing benefits. Margin trading are very challenging, and they require careful strategies like the stop loss to avoid losing all your positions. Please do well to subscribe to my channel, like, share, and comment on my YouTube channel. Thank you for listening.